How India's aviation market is changing with new players. While the detailed plans for both the airline are being finalized, it has underscored investor appetite in the airline segment at a time when existing players are in the red because of muted travel demand during the pandemic. After more than a year of distressing performance caused by the COVID-19 pandemic, the Indian airline space is gearing up for entry of two airlines, Jet Airways 2.0 and Rakesh Jhunjhunwala's backed AKASA. While the detailed plans for both the airlines are being finalized, it has underscored investor appetite in the airline segment at a time when the existing players are in the red because of muted travel demand during the pandemic. What is AKASA? AKASA is an upcoming ultra low cost carrier in or ULCC being launched by stock market investor Rakesh Jhunjhunwala, who will hold a 40% stake in the airline company. Jhunjhunwala has reportedly planned to launch the airline by April 2022 and has onboarded aviation industry veterans such as former Jet Airways CEO Vinay Dubey and ex-Indigo president Aditya Ghosh to run the airline. While Dubey is expected to be the CEO of the company, Ghosh is expected to be on the board as Jhunjhunwala's nominee. The Mumbai-based investor will pump in 35 million according to Bloomberg report and is planning to have a fleet of 70 planes over the next 4 years. The airline expects to be granted a no objection certificate from the Ministry of Civil Aviation over the next few days. How is India's airlines space shaped? Currently, Interglobe Aviation Limited run budget airline Indigo is India's largest airline with over 54% market share in the domestic passenger market, followed by state-owned Air India, SpiceJet, Go Air, Vistara and Air Asia India. Go Air, which has filed papers for its initial public offering, recently rebranded itself to Go First and plans to revamp its business model to becoming a ULCC. The upheaval of the Indian airline industry has largely been on the back of deep losses reported in 2020-21 April to March because of COVID-19, a situation that has persisted with the second wave in the new fiscal. Massive perennial losses have created a debt trap which has resulted in most airlines having very limited means of recapitalization. The government of India is providing almost no direct support. Lenders have by and large closed their doors to airline even for restructuring purposes, and lessors will soon have no option but to start applying pressure on defaulting airlines. Simultaneously, we are heading into a higher cost environment while staff morale is declining. Aviation consultancy firm Kappa noted in its Indian airline outlook from 2021 to 2022. Is there a case for new players in the sector? With the 2019 closure of Jet Airways, a potential disinvestment of Air India and the weakened position of other existing players, the airline industry is facing a threat of consolidation of market share with the major players. Additionally, with vaccination rollout gaining momentum, market participants expect the sector to bounce back. In his interview with Bloomberg TV, Jhunjhunwala said, "I am very bullish on the Indian aviation sector in terms of demand, and I think some of the increment players will not recover." What is the ULCC model? In the ULCC airline business model, the company focuses on keeping operating cost even lower than a typical budget airlines like Indigo and SpiceJet. In the low-cost model, airlines unbundle certain amenities that are usually associated with the full-service airline experience, like seat selection, food, and beverages. In the ultra-low-cost model, there is and even further unbundling of services like checked-in baggage, cabin baggage. Traditionally, while LCCs operate with the significantly lower fares and only somewhat lower cost that full-service carriers, ULCCs operate with minimal cost to ensure profitability. Who will AKASA compete against in India? Being a ULCC, AKASA will potentially attempt to take market leader Indigo head-on, which has bled through the pandemic. However, despite its massive losses, Indigo remains in a comparatively stronger position. Speaking at the post-earning conference call on July 27, Indigo CFO Jiten Chopra said, "The strength of our balance sheet is our biggest defense in the fight against COVID-19, and we will continue to enhance this strength by focusing on cost reduction, liquidity enhancement, and capacity addition." Kappa said that it expects Indian Airlines to lose a consolidated 4.1 billion in financial year 2022 similar to that of 2021. In addition to AKASA, the relaunch of Jet Airways will also be key primarily on the expectation that two entrants will look to aggressively pursue market share in the initial days. However, the ability to aggressive on the fares will depend on the government doing away with fare restrictions that were imposed during the reopening of COVID-19 lockdowns. Thank you.